Welcome back. We've got a management joining in, that of Quick Heal. They came out with numbers earlier this week. The numbers look good. The revenues went up 27%. The profits more than doubled. So on the day of the numbers, you saw the stock rally from levels of 127. It went to levels of about 140. If that 7-day chart comes up for you on your screen. And from there, it's retreated a tad bit. But we're now joined by the management, the CFO, Mr. Nitin Kulkarni. Thanks so much for joining in. You've indicated that there was some spillover of revenues from the March quarter, which benefited your revenues and margins in this particular quarter. Can you quantify that? And what would be a sustainable run rate we should expect?
So if you look at the revenue spillover from Q4 was about 28 crores, which has come into Q1. And in current quarter, Q1 also, there was the lockdown was there, transport facilities were not available, shops were closed, SMEs were also not fully operational. And in spite of that, in spite of all the challenges, even if you take out this 28 crores, so we managed to get about 46 odd crores in the current quarter. So that is the number for the current quarter.
Okay, so 28 crore benefit. On your enterprise business, you are talking about pressure. Your enterprise revenues are down 28% year on year. Are you seeing any pickup?
So on the enterprise side, see, basically this, if you look at the current situation, the demand has slowed down considerably due to the COVID-19 pandemic and subsequent lockdown, which has also reduced the overall enterprise buying. And during the quarter, this physical interactions, physical meetings with customers were absolutely not possible and stopped, and which has impacted our new customer acquisitions. Despite this headwind, the enterprise segment, we have registered a revenue of about 104 million in the current quarter. Having said that, cyber security awareness is increasing, but conversion is on a lower side, mainly due to cost consciousness. And we definitely expect the conversion to pick up once the situation has come back to normalcy, which we expect around Q3.
Kulkarni, if the general sort of mood is that one needs to cut costs, I mean, across the board, and we hear that from companies all the time, would you have to take pricing for your products a notch lower?
So see, with this current situation and cost consciousness, pricing pressure will always be there. And yes, definitely there is a pressure on pricing, and there are many factors: the competition price, then what kind of cross-sell, upsell opportunities you have. So there are many factors which determine the pricing. But yeah, because of the current situation, there is definitely a pricing pressure.
Just talk to us a little bit about the retail segment as well. The revenue per license for retail was down 19% year on year. How are things looking there?
So retail also, I mean, if you see, people have been saying that whether AV industry is at a saturation point or not. But as reported by multiple PC vendors, there has been a rise in demand in laptops and desktops, and as more people are working from home. And we definitely believe that this is definitely going to pick up in future. And on your question on realization per unit for retail, so again, we have a product bouquet. I think we have about 5 or 6 variety of products on the retail segment also, and it all depends on what kind of product mix which you are using. And it also depends on the zone in which you are selling it. So there are many factors which determine the ARPU. So if you just look at the number of total licenses sold with revenue, I think that will not give a clear-cut picture. So there are many factors which determine the ARPU.
Nitin, your receivable days have gone up to 169 versus 136 in the March quarter. Even your net working capital days have increased. Do you see it coming down? And also, what are the plans with respect to utilizing the near 400 crore of cash that you're sitting on?
So on cash position, if you look at the debtor days, so there is overall liquidity and cash crunch in the market because of the current COVID-19 pandemic situation, and which has significantly impacted our collections in Q1. So historically, Q1 has been the strongest quarter for us for collection. But because of this, there was a huge impact on collection in Q1. And we expect this to remain at least for next 1 or 2 quarters. And maybe from Q3, Q4 onwards, we feel that debtor days will come back to a normal level of 135 to 140 days. But definitely for next 2 quarters, there is a huge liquidity pressure, and debtor days are going to remain into this high range.
Okay, Mr. Kulkarni, thank you very much for your time, sir. Appreciate you joining us and running us through the numbers for the quarter. I mean, the market is now up 6 points. It had fallen into the red from being up 45 when we started around the 11 o'clock mark. Will this keep going up? We've seen this now, this tendency for intraday profit taking, and then the market sort of coming right back. We'll watch the space closely. But for now, I mean, the Nifty, flattish, Bank Nifty with about a 0.25% gain is where things stand. I think it's also time to wrap up on this edition of Trading Hour. From Reema, me, everyone on the team, thank you very much for watching. More comes up on Halftime Report in just a bit.